Ondas stock is currently trading live at $9.485 per dollar share on the Nasdaq exchange, marking an intraday movement of positive 1.88% from its previous close of $9.31 as heavy institutional volume pours into modern defense technology and automated wireless systems. Beneath this surface quotation lies a far more intense operational reality that casual market participants routinely miscalculate, treating the equity as a speculative ticket on defense hype rather than examining the structural shift taking place inside industrial radio and autonomous airspace protection. The broad public narrative insists that small-cap defense hardware providers are entirely dependent on volatile government budget approvals and long procurement cycles that choke cash flow before commercial viability can ever be reached. Conventional wisdom says you buy established defense primes or ignore microcap innovators entirely because their technology faces endless bureaucratic hurdles before seeing daylight. But that superficial assessment misses the quiet structural integration happening across automated counter-drone networks and mission-critical rail communications. When you look closely at how critical infrastructure operators are forced to secure their perimeters against unauthorized aerial threats, the reality is that demand for advanced tactical automation is accelerating at a pace legacy contractors simply cannot match with their bloated cost structures. This creates an opening for specialized developers of private wireless networks and autonomous drone interceptors to capture high-margin contracts that completely rewrite their financial standing. To understand where this asset is heading, we have to look past the ticker symbol and dissect the actual mechanics driving daily volume, institutional accumulation, and sector-wide momentum. The recent trading sessions have displayed exceptional volatility, characterized by aggressive morning buying spikes followed by firm consolidation phases where buyers consistently step in above the $9 threshold. Trading volumes have remained remarkably elevated compared to historical baselines, signaling that large-scale capital allocators are actively positioning themselves ahead of upcoming catalysts rather than executing routine short-term trades. This heavy volume concentration points directly to institutional accumulation, often mediated through modern brokerage interfaces where retail and professional participants alike manage their allocations. Whether an investor utilizes automated portfolio tools like Schwab Intelligent Portfolios or constructs a custom basket through dedicated self-investing platforms, the underlying attraction to high-growth industrial technology remains remarkably consistent across the board. Many market participants choose to execute their trades through online portals, utilizing robust digital interfaces provided by established financial institutions or specialized brokerages to maintain agile positions in fast-moving equities. For instance, individuals frequently manage their holdings across platforms such as Fidelity, taking advantage of comprehensive research tools and integrated account features, or they lean toward streamlined applications like the Robinhood app for rapid execution and fractional share purchases. Others prefer the advanced analytical depth found on specialized trading platforms like Interactive Brokers or utilize the flexible asset allocation models available through SoFi Invest to balance high beta growth holdings with stable portfolio anchors. This wide accessibility across multiple retail and institutional channels ensures that liquidity remains robust even during periods of broader macroeconomic uncertainty or sudden sector rotations. As market participants evaluate their choices, balancing self-directed execution with automated advisory services becomes a central theme in modern wealth management. Comment below how many shares of Ondas stock you currently hold in your portfolio. Macroeconomic pressures have also played a fascinating role in shaping the current trajectory, as rising interest rates and shifting capital costs force smaller technology firms to prove their unit economics much faster than they had to during previous market cycles. For a long time, market skeptics pointed to persistent net losses and high cash burn rates as definitive proof that specialized radio and drone technologies were burning too much runway to survive long-term. However, recent financial disclosures and operational updates tell a completely different story about revenue expansion and gross margin improvement. The company has methodically scaled its top-line revenue over consecutive quarters, shifting the narrative away from speculative cash consumption and toward genuine operational leverage. This fundamental pivot catches short sellers off guard as they continue to target the equity based on outdated financial models, while actual contract wins expand the order backlog to record levels. The core engine of this business rests upon two distinct pillars: advanced wireless connectivity solutions and autonomous drone-based data systems. Through its specialized subsidiaries, the enterprise designs and deploys proprietary software-defined radio networks that enable utilities, railroads, and industrial giants to operate secure, private communication channels without relying on congested public cellular infrastructure. This is critical for mission-critical operations where network failure is simply not an option. Alongside this wireless foundation, the firm has established a formidable presence in the rapidly expanding Counter-UAS and automated site protection sector. Their autonomous drone platforms, including advanced tethered and untethered aerial units designed for continuous perimeter surveillance and threat neutralization, address a massive security gap for high-value installations, airports, and military facilities worldwide. These systems do not merely record video, they autonomously detect, track, and mitigate unauthorized aerial intrusions using sophisticated radio frequency and electro-optical guidance systems. Looking toward the future horizon, the potential catalysts and risk factors present a complex chessboard for active market participants. On the opportunity side, geopolitical tensions and the escalating threat profile of unauthorized commercial drones ensure that defense and critical infrastructure spending will remain prioritized at the national and corporate levels. International expansion, particularly through strategic partnerships and multi-million-dollar defense tenders in allied regions, provides a substantial runway for revenue acceleration that could easily outpace current analyst consensus estimates. Furthermore, as industrial automation becomes standard operating procedure for major freight rail networks and energy providers, the addressable market for private wireless data networks expands exponentially. Conversely, risks remain ever present, including potential supply chain bottlenecks for specialized electronic components, execution risks associated with scaling rapid manufacturing output, and the inherent volatility that accompanies high multiple technology equities during broader market downturns. If macroeconomic headwinds intensify or if procurement timelines face unexpected bureaucratic delays, the stock could experience sharp pullbacks that test key technical support levels. Yet when we weigh the prevailing market expectations against the hard operational reality of surging contract awards and expanding margins, it becomes clear that the equity occupies a unique intersection of industrial necessity and technological execution. The initial assumption that this was merely another distressed microcap clinging to defense buzzwords dissolves when confronted with the actual scale of their deployed hardware and recurring software revenue streams. In summary, the journey of this asset reflects a profound tension between historical skepticism and modern operational execution, where patient capital is rewarded by looking past short-term noise and focusing on secular tailwinds in automated defense and secure wireless communications.